Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBP USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, as expected, we had our breakout and our trade did pretty well. Right now, we can see that GBP USD is going for a pullback. So it means that the next opportunity is coming up again. First of all, let's look at the chart of DXY, and here is DXY. DXY broke the support of 103.50. Okay, now standing at 103.23. My dear friends, keep in mind today we have Fed Chair Powell speaks. Today is 10 Jan. So my dear friends, please be careful because there may be some volatility or unexpected unwanted volatility because of the speech by the Federal Reserve Chairman Jerome Powell. Um, the market is expecting that Fed will not be going for aggressive interest rate hike, and there's a possibility that after the speech, market or DXY may go down further because DXY, before the war between Russia and Ukraine, DXY was trading around 1992. After that, the war broke out, gold, DXY started flying, and as the inflation started shooting, Fed started increasing the interest rate. So as a result, DXY made a high of 113, 114. But as after around in the month of November, I believe, after CPI, the inflation, though inflation was not come down to the level of 2 or 3%, but yes, it was easing. So as a result, Fed declared that they will not be going for aggressive interest rate hike, and from that point onwards we saw a decline on the chart of US dollar currency index, and the selling is still going on. So there's a possibility that in the coming days also we will be seeing DXY below 100, because technically we do not have any support, any immediate support on the chart of DXY. So let's wait and watch in which direction DXY moves, but fundamentally we do not have any factor that will bring a complete trend reversal on the chart of DXY right now. Now let's head towards GBP USD. So GBP USD, as we can see right now, standing at 1.2167. Yesterday it made a high of 1.2208. It was a good trade yesterday. So again, the same strategy we need to follow here. Buy at retracement, and we can already see that market is going for retracement. And as per chart, the best retracement level will be around 1.2130, where the previous resistance will be acting as a support, and we can see that we also have Fibonacci 23.6% retracement level. So it is 1.2130 to 1.2127. This is the best retracement level for GBP USD. If GBP USD comes down to this level, observe. If market bounces according to expectations, you can go for a buy position. And we have another minor retracement level. You can see here previous price rejection. So we have another minor retracement level around 1.2145 also, but to be honest, 1.2130 is a much better level. So in case market doesn't come down to 1.2130 and you see the market is bouncing for 2145, then also you can go for a buy position. But 2130, 2125 is a much better option for retracement. If market bounces, then only go for buy position. Retracement is not guaranteed. Don't forget that. And in case after a few hours, if you see that market is not going down, what you can do is you can draw a flag like this. You can also draw a flag like this, and it's a bullish flag pattern, and things are quite simple. In flag pattern, when market is inside the flag, you don't need to trade. This is your no trading zone, and once market breaks the flag and starts going up, you can go for a buy position. So in case market doesn't come down for retracement and you see market breaking the flag, you can go for a buy position again. Okay, so these are the two trading strategies that you can follow for GBP USD. But my dear friend, do not forget that this is my analysis. I can be wrong as well. So no trader is 100% accurate. So do not gamble with your hard-earned money. Follow proper risk management. Bye bye. Take care.